Hi everyone, welcome to another Sharewise webinar. Today I am joined by Elixir Energy. I have the Managing Director, Neil Young, here with me today. Thank you so much for joining me today, Neil.
Thanks for the invitation, Caitlin. Always pleased to talk to investors, existing and new.
So today Neil will take us through a presentation to give us an update on what Elixir has been doing so far in 2023. And you will also have the opportunity to ask Neil any questions. Please feel free to pop your questions in the chat box, in the Q&A chat box down below. But for now, I will hand it off to you, Neil, if you'd like to share screen.
Thanks, Caitlin. Let me just share screen. Okay, share. Yeah, hi everybody. This is a presentation I made at a conference that was hosted in Noosa last week, and I'll go through this, and then, as Caitlin said, the opportunity for Q&A after that. So please bear with me. Okay, first a company overview. Here's the macro environment that an oil and gas company of our type is in just now. Firstly, we believe that there are quite good emerging animal spirits and strong prices in oil and gas. Oil just now is about $80. It's fallen down from just below 100, but 80 is still very strong in any sort of long-term perspective. Gas prices pretty much outside the US are uniformly high, and even in America, they're now starting with a 3 at the front of Henry Hub, which in Aussie dollar terms is quite good. Now, this is driven by a number of things, but a key one is that the energy transition is proving to be much harder and much longer dated than people would like. And that means that oil and gas in particular have a very long-term future. In the US, in the last few months, we've seen some very significant takeovers, with both Exxon and Chevron doing about $60 billion US deals themselves. So in Aussie dollar terms, in about a month, we've seen $200 billion worth of oil and gas transactions. I expect that to cascade throughout the US, potentially to Europe, and ultimately to Australia. Now, those transactions are happening because those companies believe in the long-term future of oil and gas, and they're pretty smart money. A second issue is security of supply, and the Ukraine war in particular showed the value of this as disruptions to energy supplies became manifest through that conflict. Now, Australia does have some political faults. We're not perfect, but we are still seen as a reliable supplier of energy, particular to allied nations such as Japan, South Korea, etc. And of course, from Mongolia's point of view, where we have our Nongguan gas project, it is seen as being a very secure source of energy for China, and China currently imports a lot of coal from Mongolia, and if our project and other peers go well, they'll be importing gas too. So location is important not only for security of supply, but for access to infrastructure. Now, in Mongolia, we're next door to the Chinese energy markets. In Queensland, we are quite proximate to existing transmission infrastructure, which connects to domestic markets and the LNG plants in Gladstone in Queensland, which have current and growing spare capacity. Lastly, our hydrogen project in Mongolia is predicated on one thing: location. Hydrogen's very expensive to move, and Mongolia is next door to China, and that's a big advantage there. Moving to our team, I'll go through this quickly because many of you might have seen it before. Good for the mathematicians amongst us. Our number of shares is about a billion, so you can calculate our market capitalization fairly readily by multiplying that against our share price, which is currently about 8 cents. Our last cash position was about $11 million, and we've had some inputs of cash as well as expenditure since then. Our board of directors is led by Richard Cottee, well known for QGC, which actually owned assets proximate to our new Queensland asset, which are now owned by Shell, and Shell are currently drilling in them. Another Queensland warrior, Stephen Kellerman, who worked for Santos for 4 decades, founded their CSG business. I've worked with him before in that capacity, and he's very knowledgeable in all sorts of unconventional plays as well as CSG. Anna Sloboda is from the ex-USSR, worked in China, worked in the resources space, and enormously relevant accordingly to our Mongolian position in particular. So our Grandis gas project, this is where we are most active just now. Just jump to slide there, or jump to. So project location, which I referred to, we are about 50 to 100 k's from the Wallumbilla gas hub, which is the primary physical and commercial gas hub in Australia. That connects to all the southern markets. It connects to the LNG plants in Gladstone as well as the Queensland markets. We're in a feature called the Taroom Trough, where others are drilling as we speak. Market factors are driving that. The rapidly emerging demand-supply gap in East Coast Australia, the spare capacity in the LNG plants, and the desire of buyers for security of supply. And we are pleased to announce a few months ago that the federal government had in effect given us a binding undertaking that it would fund half the cost of our Daydream 2 well there through an advanced finding that will qualify for R&D tax credits. Okay, this location we consider to be an energy super basin. This is a concept developed by Wood Mackenzie, who is the global premier advisor to the oil and gas industry. They see this concept as being where oil and gas are co-located with carbon capture and storage and renewables, and all of these are present here. We recently did a deal with Origin Energy, who has been provisionally granted a carbon capture and storage or CCS license that overlaps part of our block. They are currently paying us $1 million plus any incremental costs we incur for the opportunity to gain data from our Daydream 2 well. Now, what's the relevance of an energy super basin? Well, basically, Wood Mackenzie is right, and I think they are. They're signaling this is where big money will be and where it wants to go. And we're already seeing that with for instance, Marubeni and J-Power from Japan spent $20 million buying into the Glencore CCS license that overlaps the east part of our block. A number of parties are building, including Sojitz from Japan, a $200 million solar farm there. Origin have an expansive CCS program. And of course, on the gas side, there are us, there's Shell, there's Santos. So speaking of Shell, we found a document that was disclosed in public, albeit heavily redacted, and they said that they believed they had 3 trillion cubic feet of sales gas in their block to our immediate west. They're currently drilling in that block. Then naturally, they'll keep everything pretty secret. But things that leak out in due course, and it's incredibly pleasing for a junior company to have one of the world's largest energy companies drilling in the same play. Santos have assets to our immediate north and south. Kevin Gallagher, their CEO, has said that they've got multi-trillion cubic feet potential, and we were pleased recently to sign an agreement with Santos under which we would share data from our respective wells in these blocks. Our own contingent resources at this stage are conservative. Key objective of the drilling of our well is to materially add to them in various ways. We also have an ASX peer located to our southeast called Omega. They recently have booked independently certified contingent resources following a 2-well program that they undertook earlier this year of 1.7 TCF. So we can see if we add these numbers up, there is a lot of gas here. There's a lot of parties of different sizes trying different things. And the great thing about that is that the more things tried, the more likelihood in an unconventional play like this, that what we call the code can be cracked. We see some people drilling vertical wells, some people horizontal, different stimulation techniques will be used, and all of those will in effect coalesce into the opening up of a significant play. So here's just a restatement of our resources. We have discovered contingent resources, as noted in the prior slide, of 395 billion cubic feet. We have speculative, i.e. prospective resources, and here these are located in coal seams, very deep in the Permian section here. A key objective of our well program is to stimulate and flow gas from those coal seams, and if we do, we can start to move some of the 1.3 trillion cubic feet of prospective resources there into the discovered category. So our project here's timeline, we've got news flow coming over the next 6 months. We spudded about 10 days ago. We provided a couple of updates since then. The drilling has been going very, very well. And we will provide regular updates until we reach target depth in prognosed early December. We will log the initial section there. We're highly confident, given its proximity to a well that Shell drilled of a thick section, and we'll provide market with updates from that. That will give us data to optimize our stimulation program, which will commence early in the new year. It will be a multi-stage program, about 5 stages planned for just now. We'll attack both the sandstones and the coals, as I mentioned, and they will undertake production testing at the end with a view to getting flows that hopefully will be commercial, but even if they're not initially commercial, and they often aren't in these sorts of unconventional plays, they will provide a lot of data to then design the next well and the well after that and the well after that. So we believe we've got game-changing objectives here. They are multiple in nature. Firstly, we're going to intersect a column that we prognose at this stage to be about 500 meters of gross thickness. We will stimulate that across its entire zone. We will confirm the low carbon dioxide that is strongly understood to be present here. We'll confirm the liquids content, which other operators consider to be very, very high, and we certainly hope that to be the case, because that can really boost the economics of a development. We'll undertake what are called DFITs to fully evaluate data required for the fluid stimulation program, and then we'll expand the contingent resources. As noted, there's R&D elements here which go to the government funding of half the cost of the well. They include things like microproppants, which are much smaller proppants than ever been used in Australia before. We'll gather data for a scalable development plan, which could easily include 500 or more wells. Ultimately, development could be vertical, deviated, or horizontal wells, or a combination thereof. And the multiple operators working in the play will all provide data which allows that to be optimized to the benefit of all. So moving to our longer dated but still important Nomgon coalbed methane play. And I'll be fairly brief on this. Currently, the area of maximum focus just now is clearly on Queensland, and that's where the really company-making events will hopefully occur over the next few months. So just to restate, our foundation asset is a very large production sharing contract, of which we own 100%, located close to the Chinese border. That permit overlaps a number of mines, of which the most significant we can see in the southeast is Rio Tinto's Oyu Tolgoi mine. And in recent years, followers of Rio would have seen that company note its aggressive plans to reduce its emissions footprint from its operations. And we are well placed to engage with them on that. Not only are we proving up a gas resource, we also have our hydrogen project, which I'll talk a bit more about, but also we have been gathering data and securing land proximate to that mine for wind and solar options, and the combination of gas and renewables and potentially hydrogen will, in our view, be a very attractive one for such a large and environmentally conscious energy user as the Oyu Tolgoi mine. Our first discovery was made a number of years ago. We commenced a pilot project nearly a year ago, and that's been ongoing through this year and will continue into next year. So talking about that pilot program, the aim is to dewater coals and flow gas and provide proof of concept for a commercial development. It was the first of its type in Mongolia, but we're now very pleased to see that others have and will follow us. That, again, in these unconventional plays, like in Queensland, the more work that people are doing, the better, because you all learn from that, and it all attracts more interest from others into the play. The initial pilot was 2 production wells, about 100 meters apart. We've recently added another one. Depths here are fairly shallow, about 450 meters, so very, very different from our Queensland well. We will flow water and gas ultimately into 2024. Initially, we got some very good gas flow rates, as we see in the photo there of the flare, up to 200,000 cubic feet per day. But we believe that some of that gas was effectively flush production from gas in fractures rather than cleats. And now we're optimizing the pilot program through an extended period, which is entirely common for these CBM plays, for a longer period with a view to proving that commerciality. Moving last but not least, but certainly longer dated, to our Gobi H2 or hydrogen project. As I noted earlier, we selected a location as being immediately proximate to China, which is the world's largest importer of energy in current forms, and moving hydrogen is far more expensive than moving existing energy forms. In our view, it costs about 4 or 5 times more than moving methane, and therefore being proximate to the end user is even more important. Our key validation of this theory came with the entering into of an MOU with a very large Japanese company called SoftBank, which we did last year. Earlier this year, the ownership of SoftBank's renewable projects, including this one, were moved to a member of the Toyota Group, and now we're working with them to advance this. Key steps are to secure offtake in Mongolia of the type I mentioned earlier, and ultimately into China, and we're still working on this as we speak. It's a fabulous project with immense scalability, but it is longer term than the other ones that we've discussed earlier. So just quickly going to highlights, the most significant just now is that we are currently drilling Daydream 2. This is the highest impact well that Elixir in its various forms has ever drilled. And we look forward with great excitement to reporting on that through the weeks and months to come. In the background, we're still pursuing Mongolia's first CBM pilot project that will be taken and handled very, very carefully and gradually, as these projects typically are in CSG throughout the world, and we look forward to providing updates on that as we go through into 2024. So you can see we have a lot of catalysts in this fiscal year. We're adding material resources, we're de-risking projects as we speak. Now, this is built upon a foundation of highly experienced teams of technical and commercial people in both Australia and in Mongolia. We've procured multiple funding sources, of which the best examples are the recent ones from the federal government of Australia and Origin Energy, which have in effect provided funds for Daydream 2 without any dilution on our part. The Ukraine war has shown the value of security of supply, and the energy transition has taken longer than people would like, both of which factors mean that gas in our locations will be and are being increasingly valued. We have a good balance sheet. We have 100% ownership of our 2 natural gas assets, and that gives us enormous flexibility to bring in partners or other forms of financing as we progress and mature them. So that's our corporate highlights in a nutshell. I'll now stop sharing and we can go to Q&A.
Thank you so much, Neil, for such a good presentation. It was a really good update for our audience of what you guys have been up to this year. For those of you who have joined us midway, please feel free to put questions in the Q&A function down below. But let's get into it. So before we get into the live questions, I've got quite a few pre-submitted questions. So let's first head to Queensland. So someone wants to ask, what are Elixir's intentions if the Grandis drill is successful? I think you showed us that timeline, but if you would like to just reiterate maybe a short overview.
I think the analog here, Caitlen, is with what happened in coal seam gas in Queensland about 15 years ago. And that is, once large resources were discovered and were started to be de-risked, then that attracted an enormous amount of global interest from large companies and large gas customers. And we would see a similar thing happening here. As I noted earlier, there's already a contingent resource number in the Taroom Trough of quite a number of trillions of cubic feet of gas. Now, as those resources are increased and de-risked, we would expect the incumbents, such as Shell and Santos, to determine what their longer-term position is. We would expect the people who are already in Queensland but not in these assets, and they include Conoco, all the Chinese national oil companies, Total, Kogas, Petronas, to consider, do they expand in Queensland? We would expect, for instance, Japanese companies who buy gas from Australia to take an interest. And so we would see our role is to get in early, to de-risk, to add value, and then to bring in partners and owners progressively in a way that maximizes value. So success in Daydream 2 will put us on that pathway, and we think there's very good precedent for that.
And I know that you highlighted the benefit of having so many major competitors such as Shell and Santos drilling in Daydream 2 as well for, different testing purposes. Do you see any threats in having such a saturated drilling environment?
I mean, it's a good question, because there can be, for instance, competition for rigs. But there's a positive side to that coin, and that is, for instance, we're using the same rig and much of the same crew who drilled 2 wells for Omega Oil and Gas, who I mentioned earlier, in this play. What that means is that the rigs and the people get used to the geological formations, and they can do things more quickly and more cheaply than if it was a virgin play, and we're already seeing that. So we think with careful management, we can manage competition, and we try and look far ahead to, for instance, secure rigs well in advance, and try and maximize the benefits whilst mitigating the risks.
Okay. And moving on to Mongolia, we have quite a few questions. What is the plan with the Mongolian pilot program?
So the pilot program will be proceeded with through into next year. As I noted earlier, we started with 2 wells. We've added another one. We're certainly considering adding another one if we need to. But our base plan just now is to very, very gradually bring on water production and then gas production in a very measured and controlled way through a period which at this stage is indeterminate, but we think could be quite a number of months at least, through to the point that gas gradually breaks through from the cleat system as well as the fracture system that we saw, and then can be sustained and shown to be on the rise. And then at that point, we can see whether on the path to commerciality, with all the optionality that opens up for us there in terms of bringing in partners or new sources of capital if we wanted to.
And we have a question submitted here too. So if we were to achieve this commerciality, what kind of flow rate would we be looking for?
That's a question which is difficult to ask, and then we haven't put into the market an exact figure on this. There's multiple factors that come into the definition of commerciality, such as expected price and expected costs. It's fair to say in a low-cost environment like Mongolia, proximate to a high-price environment like China, that sort of break-even rate could be considerably lower than it is in somewhere like Australia. So we don't want to really tie ourselves down to an exact number at this point.
Okay. And then someone asked, are we still operating in the USA? Could we get an update, please?
Elixir had assets in the States about 10 years ago. But certainly since I've been on board for 5 years, there's been no activity in the States. And indeed, we managed to shut down some long-standing subsidiaries which we had there, just to tidy up the corporate structure and the balance sheet. And so there's been nothing in America for quite some years.
And I know you mentioned that the Ukraine war highlighted the need for energy. How did this energy crisis impact Elixir specifically, both positively and negatively?
So, I mean, when the war broke, and then in a number of months afterwards, gas prices went through the roof in Europe as the Europeans realized they couldn't rely on Russia as a gas supplier. Companies like Shell and BP lost tens of billions of dollars from Russian assets that they had basically in the blink of an eye. So what that meant was that the parties, such as a Japanese gas buyer or a European gas buyer, even could see the value in gas assets in Australia. Now, we had a bit of a blip in that, in that the Australian government reacted to those high prices in a rather cack-handed fashion by introducing late last year some intervention in gas markets. They took 6 months to basically row back to where they started from. And so that was a bit of an unfortunate blip. But the reality is that one of the world's largest gas suppliers has taken itself out of the equation of being a credible gas supplier for probably decades, and that has made every other gas supplier from a safer nation with resources more valuable.
Yes. And another question we have is in relation to your Origin Energy $1 million deal. Do you see any potential for a future longership partnership?
One aspect of that deal was, and we noted this in our announcement, is that to the extent that we drill another 5 wells, then in each of those wells, Origin's got the option to do the same deal and basically pay us for data. So that is valuable to us in those instances. In the case that I've said of success in gas drilling, we would see large companies want to come into this play. And those large energy companies want to be in these energy super basins where there are renewables and CCS opportunities as well. So maybe not with 100 million or less market cap Elixir, but if, say, we had Japanese company X come in, then that would be a very fertile environment for them to discuss with Origin as to how they might participate in things like, even as, and it seems far-fetched, but people are talking about it just now, and even Santos announced a deal like this with a Korean company about importing CO2 from those allied nations to Australia and sticking it in the vast pore space that we have, which they don't have, to deal with in the long-term CO2 emissions.
And another question is, will there need to be more fundraising to complete the Grandis production testing?
I mean, it's always a question that people ask companies who have no revenue, will you ever raise money again? And of course, the traditional answer is no, but the real answer is yes, we might raise money at some time in the indeterminate future.
Okay. Well, with that, I think that's it for today. Thank you so much, Neil, for your time, and for everyone that's watching. As usual, we will upload the recording on YouTube for you to revisit it. But thank you so much, Neil, for joining me today.
Thanks, Caitlen. Always a pleasure. Thanks.